heart of global constitution, one institution. Before the Fed, the U.S. economy suffered under cyclical, chaotic bank panics and severe depressions.
The Panic of 1907, stemming from unregulated trusts, proved the absolute necessity of a central financial backstop.
A secretive group of influential bankers met on Jekyll Island, Georgia, to draft the blueprint for a national bank. The Federal Reserve Act of 1913 created a decentralized central bank, deliberately balancing private and public interests.
The Fed was unique, 12 regional reserve banks, ensuring that financial power was not centralized solely in the capital.
Initially, the Fed's primary role was mundane but vital, clearing checks and stabilizing the payment system. The First World War forced the Fed to play a major role in financing government debt and managing inflation. Power to lend to banks, the discount window, was established as the key tool to prevent individual bank failures. By the late 20s, the basic architecture was in place, ready to face its first, ultimate test.
Fed buying government bonds, represented by a flow of cash entering the financial system, the primary tool for injecting or draining liquidity.
The 1951 Accord established the Federal Reserve's independence, a crucial step for the nation's financial stability.
The price level line, or inflation, rises steeply, acting like a ramp that accelerates the economy out of control and consumes purchasing power.
Global capital flows from China and Asia directly into U.S. Treasury bonds. This influx funds the U.S. current account deficit, keeping long rates low.
As deregulation took hold, these regulatory walls came down. This allowed complex instruments like
We are committed to utilizing our tools to ensure a return to price stability. The incoming data suggests that
the global reserve currency advantage allows the U.S. to weaponize the dollar, severing critical financial pathways.
Based on this history, I order an unprecedented injection of cash.
The Fed's balance sheet. Regulatory reform, specifically the Dodd-Frank Act, allowed us to rebuild the banking sector with fiscal and monetary fusion.
U.S. rate hikes translate directly into higher dollar debt service costs for developing nations, squeezing their economy. The carry trade effect. The interest rate differential fuels the risky carry trade, where investors borrow cheap dollars to invest overseas.
The U.S. benefits from the exorbitant privilege, the ability to finance its deficits by issuing the world's reserve currency.
To that day, price stability is the only sustainable
Path to long-term growth.
We must prioritize taming inflation, but
The question remains, is such immense economic power concentrated in an unelected body truly democratic? The Fed's toolkit. The modern Fed operates with a vastly expanded and complex arsenal of tools, refined by decades of crisis.
We project that the appropriate target range for the federal funds rate will be maintained, providing the clarity the market needs. The Fed must prepare not for the last crisis, but for the next, which will inevitably be different and unforeseen.
The Fed's influence is often like an invisible hand, subtly shaping the contours of the global economy. The central bank's credibility is its most valuable asset, earned through decades of painful policy decisions.
The isolation of power is immense. The consequences of a single policy error ripple globally.
Prolonged low interest rates encourage malinvestment and hinder the natural cleansing process of the economy.
The interconnected nature of modern finance means the Fed cannot make a purely domestic decision.
The future of money is digital, a realm the Fed must master or risk irrelevance.
Exiting unconventional policy is often more difficult and riskier than implementing it.
The Fed's policies are constantly informed and debated by shifting academic theories.
Every major policy move is a direct lesson drawn from the long, often painful, history of financial crises.
The power is absolute. The responsibility overwhelming.
Achieving the dual mandate means striking a delicate balance between maximum employment and long-term price stability.
Welcome to the largest continuous economic experiment. Every variable is meticulously tracked in real time.
The weight we carry defines the strength we must possess.
The future of money is digital, a realm the Fed must master or risk irrelevance in the technological economy. Exiting unconventional policy is often more difficult and riskier than implementing it.
Your focus on the money supply ignores the liquidity trap. We need fiscal stimulus.
Nonsense!
The power is absolute. The responsibility overwhelming.
By managing expectations, the Fed attempts to control the future behavior of billions of economic agents.
The central bank's credibility is its most valuable asset, earned through decades of painful policy decisions. Prolonged low interest rates encourage malinvestment and hinder the natural cleansing process of the economy. The interconnected nature of modern finance means the Fed cannot make a purely domestic decision.
Simple interest rate is the most powerful weapon in the economic arsenal.
Rigorous stress testing ensures that the financial system can absorb massive shocks without collapsing.
The decentralized structure is designed to promote checks and balances within the central bank itself.
The speed of data acquisition dictates the speed of policy reaction in the modern age.
Climate risk is increasingly seen as a systemic financial risk that the Fed must monitor.
The Fed's primary role is to ensure that the vital market plumbing has enough liquidity to function. Consensus is key. A unified voice lends credibility to a powerful policy action.
Public trust is crucial. Effective policy relies on the public believing the Fed will achieve its goals.
The role of the central bank is not static. It constantly adapts to the needs of the economy.
The Federal Reserve, the invisible, indispensable engine of the modern, connected financial world.
And here it is, the largest continuous economic experiment. We are thrilled with the results we're seeing.